investors generally buy gold as a way of diversifying risk. Compared to other precious metals used for investment, gold has been the most effective safe haven across a number of countries. Now gold has risen to new high levels after Russia's invasion of Ukraine, intensifying the crisis in Eastern Europe and letting bullion play its traditional role as a harbor amid geopolitical unrest. It's a big flight to safety happening in markets right now, and the only true safe haven appears to be gold, with crypto and stock markets tumbling. Bullion had risen in recent weeks as Moscow's standoff with Ukraine intensified, helping to offset other headwinds, especially monetary tightening by the US Federal Reserve. Not only are other asset prices affected immediately in the event of war or even the threat of it, but wars also mean excessive money printing and accelerated government spending. It's no surprise then if investors turn their attention to gold and other precious metals, which are historically seen as a hedge against major economic and geopolitical ructions. The situation in Europe already seems to be getting out of control. In Austria, for example, gun sales are at record levels. People are arming themselves as protection against any potential attack, following an influx of refugees into Europe. If the outlook remains more or less the same, people might shift some of their portfolios toward gold and other precious metals, which might support precious metals in the medium term. Gold could continue rising. The more debt that is created, the lower currency's value. Also, as debt rises beyond a certain point, many countries would have to increase taxes and cut spending in production areas. This would allow the countries to service interest costs. This has a negative impact on economic growth, but it leads to higher value for gold. Like most commodities, the price of gold is driven by supply and demand, including speculative demand. However, unlike most other commodities, saving and disposal play larger roles in affecting its price than its consumption. Most of the gold ever mined still exists in accessible form, such as bullion and mass-produced jewelry. Gold comes in many forms, so one may be better suited for your investment strategy than another. You could purchase physical gold coins or bullions, but they must be stored in a secure environment. This may involve paying a broker, bank, or another firm a fee. Investing in gold stocks is similar to investing in any other security, except prices may move with the stock market. For example, if you are investing in gold mining companies, the price of the stock may reflect the company's financial health and market position more than the price of gold. This can create a false sense of security if you are using it as a hedge against risk. The performance of gold bullion is often compared to stocks as different investment vehicles. Gold is regarded by some as a store of value, whereas stocks are regarded as a return on value. Stocks and bonds perform best in a stable political climate, with strong property rights and little turmoil. It is the opposite for gold. Many nations use foreign vaults for safekeeping of part of their gold reserves. It has been a valuable commodity for centuries. Throughout history, gold has been used as a currency and a symbol of wealth and power. Gold has been found in grave sites, buried alongside remains dating back as far as 4500 BCE. This long-standing value demonstrates the stability of gold and its attractiveness over time. It is no wonder why gold is considered by investors to be one of the safest investments. Investing in gold, whether the physical metal or gold-related securities, is a complicated decision and not one to enter lightly. If you do decide to purchase physical gold, make certain you are buying from a reputable dealer. If you are purchasing gold for your retirement account, you must use a broker to buy and a custodian to hold your gold. As a general rule of thumb, financial experts often suggest that you not have more than a small percentage of your assets in gold. This is believed to be good advice because it acts as an insurance policy. If you lose all other stocks in a crash, your gold should follow historical trends and go up in value, keeping you from losing everything. Don't forget to leave a like and subscribe for more. World of Finance TV has videos every Monday and Friday.